On today's episode, we are going to take a look at a fintech stock, which is actually backed up by Berkshire Hathaways. And as we all know, Warren Buffett is the CEO there. This is actually a crazy growth stock. We're going to see in a few minutes that this is a stock that is expected to beat both the industry and the market in revenue growth and earnings per share growth for the next 3 to 5 years. We're also going to see how Berkshire owns about 5% of the business. And to me, owning that much is actually a huge amount. So it kind of gives a bullish sentiment towards the business. So in today's episode, we are actually going to take a pretty close look at what they do. We're going to take a look at their future expectation growth. We're going to take a look at their past growth and any recent articles or any recent movements that this stock has done. The company is called Stone, and the ticker is being purchased under the NASDAQ as ticker STNE. So let's get started. If you are new to my channel, if you are a long-term investor, if you like learning about growth stocks, make sure to hit that subscribe button. To all my returning viewers, I appreciate the support, and like always, make sure to hit that thumbs up. It helps the channel out so much, and I truly appreciate it. If you guys ever want to get in contact with me, make sure to post on the comments. I'm very active there, but I also do have a Twitter, which I'm very active, and I have a Discord channel, which is free to all members. Like I said, this is a free channel. I am not charging anybody anything, but at the end of the day, I am not a professional, and all the information that I share here are pretty much my opinions and should not be taken as advice. Finally, you can check out my website, josenaharo.com. I am starting a weekly newsletter, and I am starting written blog posts as well. So if you guys want to have another way to just pretty much read my information, feel free to check out the website. Tomorrow is actually Monday Matches, and Monday Matches is where I put two companies against each other. And after researching this business, I want to see, maybe do you guys want to see Square versus Stone? Make sure to let me know in the comments. If not, feel free to let me know any other two companies you guys want to see go against each other. All right, so the first thing I want to take a look at is price performance. And remember, this is the company called Stoneco. And remember, the company is called Stone, ticker STNE for all my podcast listeners. And right now, this actually has a market cap of about $11 billion. Their headquarters is in Brazil, and we're going to see this is a fintech stock because it does stuff like e-commerce, e-payments, and other things that help small businesses to medium businesses in that platform and that matter. To me, the closest business I can compare it to would actually be Square. So if you understand what Square does, this is pretty much what Stone does. So if you guys want to kind of already get a gist of what they do, just picture a Square in Brazil. So first, and in today's episode, we're going to also talk about why there is the potential of that market there in Brazil and why there is potential growth. So like I mentioned, this right now has an 11 billion market cap, and I want to take a look at it in price performance from February 20th, and that's pretty much when the market started tanking. When the market started tanking, this actually lost almost 60% of the value. But right now, it's actually only sitting at 9% down from its stock price in February 20th. It's currently sitting at about $40. And we all know one of the biggest risks I want to talk about right now is we all know Brazil is one of those countries that's actually being hit pretty hard with the COVID-19. So we can understand why there was such a big drop of over 60%. And I do believe Square saw similar results. But now it's to see how well they move from that and how well they what kind of innovations they do to try to move their business into a way that can actually succeed with the current pandemic. So like I mentioned, right now, Berkshire owns a nice portion of this business. And here we can see all of the businesses that Berkshire owns. And STNE is actually one that Berkshire purchased in Q4 of 2018, so about a year and a half ago. And right now, STNE, they own about 5% of the total business. But remember, STNE only has about 11 billion market cap. So for the overall portfolio of Berkshire Hathaways, it's actually only about 0.23% of their portfolio. But remember, that's Berkshire Hathaways is a business that has over $180 billion in cash, and their overall portfolio is almost similar size. So for them to have purchased 5% of the business, I do believe it is a very bullish sentiment. And just because Berkshire Hathaway owns it does not mean that it was Warren Buffett that purchased it. I do believe it was one of their portfolio managers. But remember, when purchasing something as 5% of a business, I wouldn't bet against that it has to go against the top dog himself. But remember, these are also people that are being trained under him and to follow his type of ways. So even though it might have not been a Warren Buffett purchase, just because it is under that Berkshire Hathaways and under that team, I do believe it has a strong sentiment of the business. Okay, so now let's take a look at what Stone does. And the best place to actually understand what any business does is pretty much to just go to their website. So even though there is this is a Brazilian company and they're independent businesses, we're going to see they have independent solutions and platforms. Those are all in Portuguese. You can actually go, and obviously thanks to Google, and do translate. But their main website, which kind of gives you an overview of what they do, is actually in English, so feel free to check it out. But right now, they pretty much have 5 solutions, and they all kind of integrate one way with each other. The first is called Stone, and Stone is pretty much your point of sale solution. So this pretty much gives us, let's say if you want to start a restaurant, if you want to start some form of small to medium business, you need to have ways to track your inventory, to have to be able to track taxes, to be able to track everything that your business needs to track financially, from accepting payments to sending bills and receipts. That's what Stone does. It's your point of sale solution. Then they have the second solution they offer is called Pagar-me, which I'm not fluent in Portuguese at all, but to me it means pay me. And this is pretty much a pay service provider that helps small businesses owners to accept online cards quickly, providing an all-in-one experience to the customer. So it seems to be also like, if you want to think about it, of a PayPal extension, that's how Pagar-me seems like. Next, we have MoneyPag. And this is if, let's say, you want to start online business. You need to have a website. You need to be able to track inventory. You need to be able to track your analytics. This is pretty much your all-in-one feature. It's a full-feature e-commerce gateway that has one integration and connects to e-commerce websites. So, like, again, if you want to do e-commerce sales, this is the app solution you want to choose. Then they have something that's called Equals. So Equals is pretty much a smart financial management. If you are a business and you want to see a visibility of your sales, receivables, and more understanding of your overall financial management, that's the solution you need. And then they actually have another one called Capta. This one actually confused me because this also seems like another point of sale solution, very similar to the main Stone. So maybe if you guys actually, and I actually took a look at both their websites and did the translation to English with the amazing power of Google, and they both pretty much seem to share the same type of solutions. But I do believe, now that I think about it, it does seem like Capta is probably meant for bigger clients, where Stone is meant for those small base clients, small to medium business, where over here they say they work with various brands. So to me, this means like I would say that this means more to bigger businesses compared to the one Stone is meant for. So now that we understand what Stone does, and I think that's pretty much a quick overview, and it really gives an understanding of what they do, let's try to take a look at what a future growth Stone is expected to see. So like I mentioned earlier in the episode, Stone is a company that's actually expected to beat the industry and the market in both revenue growth and earnings growth for the next 3 to 5 years. So here we have some analyst estimates for Stone. In revenue growth, this business is expected to grow 27.6% on average annually for the next 3 to 5 years, when the industry is only expected to grow 11.7 and the market is only expected to grow 9.4%. So this is actually a strong growth. Company is expected to grow revenue at a double pace than what the actual industry is expected to grow, and almost triple of what the market is expected to grow. Now, if we take a look at earnings growth, Stone is actually expected to grow about 29% annually for the next 3 to 5 years, where the industry is only expected to grow 24.5 and the market is expected to grow 23%. So we can see this business is expected to both beat the industry and the market for the next 3 to 5 years, and that's actually pretty strong. And later on, we're gonna in a few seconds, we're gonna see why this growth is expected and why it actually might be even higher. Next, I want to I took a look at this article from The Fool. It's called Stoneco Disrupting Status Quo Economy in Brazil. And here I did take a pretty cool part from this article. And it kind of shows why there's such huge momentum or such huge growth expectation for a company like Stoneco in Brazil. And these are the main reasons why a lot of people see huge growth in Brazil for Stone. First, cash transactions still make up nearly half of the country's overall transactions. And the second is that e-commerce still make up less than 5% of the total retail sales. So pretty much in simple terms, this has such a huge market that it can continue to grow. It's not like the market is oversaturated right now, so it's not that they have to fight other businesses for it right now. Right now, they just have to change the overall mindset, I want to say, of the people in Brazil to, hey, maybe it might be easier to do e-commerce shopping. Hey, it might be easier to do online transactions or e-payment transactions, opposed to having always carrying cash. But another risk here, I mentioned that the first risk was because of COVID-19 being hit very hard down there, that can kind of affect this business. But as we saw, they do have more of e-commerce type solutions as well, which might actually do good during this pandemic. But the other thing I want to mention is companies like Brazil, they mentioned it in this article as well, do not have I want to say, FedEx or UPS or UPS, some form of shipping business down there. So that's one of the main reasons that e-commerce sales right now are pretty low compared to the total retail sales, because there's no real system at the moment. And Stoneco has mentioned that they kind of want to be, this is weird to say, but they kind of want to be the Amazon, where first they started off with a point of sale solutions of the products they're doing. Then they did the type of payments. Then they're doing the e-commerce, and eventually the last step they want to keep working down on is eventually close that wheel and be a full turning system where, hey, you can do everything from payments to start a business to delivery to shipping in Stoneco. And even though that's something they are not looking to do right now, they do say the future for Stone is that wheel be completed. And like that, I think is a very strong message and a very strong roadway for a business to have. So now that we understand why there's this huge growth potential in Brazil, I actually want to take a quick look at their most recent earnings. And I want to show you guys they've actually done some few acquisitions in this past quarter to actually improve that wheel growth. So in their most recent earnings, which I think they presented in May, let me take a quick look real quick for you guys. Here, their most recent earnings, which was on May 26th, so not even 2 months ago, this company reported revenue growth of 33.8% year over year. And this would have actually been a lot higher, but due to the whole COVID-19, Brazil being shut down for some time, it obviously affected that. So still see even the 33.8 year-to-year growth during the whole pandemic is a pretty strong show of how much growth this company has. So now let's take a look at what I was talking about, recent acquisitions. So they recently did new investments. They did purchase, and again, with that similar style of helping businesses and creating solutions for them. The first thing they did is Actually, I don't know what order they did, but one of them did is they purchased this platform called M Labs. And M Labs is pretty much this social media software platforms that is meant for small businesses in Brazil. And you pretty much have all your social platforms in here, so it helps you as a small business be able to track everything from your Facebook to your Twitter to your Instagram to your Pinterest to your LinkedIn, to make sure everything's up to date, to be able to adjust everything through one platform. To help that growth in small businesses. So again, it's a solution that small businesses will need to grab that attention from others. The next one I want to talk about is called Delivery Much. And this is one of the pioneer businesses of food deliveries in Brazil. The best way to talk about it is Uber Eats, right? If you think Uber Eats, this is what Delivery Much is. And again, they mentioned this is one of the pioneers in the business for food delivery in Brazil, which I think is a great move. And this has actually seen 145% year-over-year growth in GMV, and it has increased to about 230 plus cities in Brazil. Then the previous one I talked about, M Labs, it had increased 99% growth year over year in numbers of social media profiles as of April 20th. And the final one that they bought was called Vita, and this is pretty much a pioneer of a 24/7 telemedicine model in Brazil. So if you want to think about Teladoc, this is another business that they worked with. And you might be like, how does that actually work with their overall wheel platform? But remember, they have point of solutions for all types of business. They have e-commerce. So this allows that for the medical field. So I do believe it continues with that wheel improvement for the way they want to move. They also talked about new features that were previously launched this quarter. For example, payment link. They've also doing QR code payment to help with that contactless payment, and especially like I said, in Brazil, a place that's being hit pretty hard, something like this would actually help a lot. They've also increased their virtual shops, their e-commerce platforms. And then I want to show you guys how their business is actually growing. First, again, this is all information provided through their earnings report. First, active clients. Year over year, active clients have increased 72%. Total payment volume has increased 42%, and total revenue has increased 34% compared to the same time last year. For total payment value and total revenue and income, that actually saw a decrease quarter over quarter, but remember, there was a shutdown happening. So there was a moment of pause. So that is expected. I do believe that was more due to COVID-19 than due to the overall business solutions that this company has. All right, so now I'm hoping you guys are enjoying the episode. Let me know what your current thoughts are of Stoneco. Is this a company that you actually knew about before? And remember, if you are new to the channel, make sure to hit that subscribe button and hit that thumbs up. It helps the small channel out so much, and I truly, truly appreciate it. So next, I just want to take a look at historical revenue growth. In 2019, they actually grew revenue 58% year over year. In 2018, they grew 75% year over year. And in 2017, they grew 71% year over year. So we can see not only has this business in the past grown strong revenues, but it is expected to continue that strong revenue growth. Next, I wanted to take a look at their margins, and here we're taking a look at two things: their profit margins and their gross margins. Remember, this is a growth stock, so normally in growth stocks, they usually have very low profit margins. They're either not breaking even, or if they are breaking even, if they are making some form of money, it's pretty low. But I am liking this. In 2019, their profit margins were actually 31.2%, and that's pretty high, in my opinion, for growth stocks. Their gross margins are as high as 83.4%. And if we take a look at their profit margins, they have increased for the past 5 years, I want to say. Yes, for the past 5 years, it keeps getting better. So even right now, I want to say even right now, if they stay at 31.2% for 2019, that to me is actually pretty strong. And if they continue with that revenue growth, the amount of money they're going to be bringing in is pretty amazing. All right, so now it can't be all good, right, for the business. There has to be something bad about it, because if not, everybody would be investing in it. So to me, this was the main thing I found. And as revenue is increasing for this business, their net cash flow from operations is actually going the opposite direction. And in theory, you actually want that to be the opposite. As revenue continues to go up, you want your net cash flow from operations to continue to go up. So this to me tells me is that they're not making money from their everyday activities at the moment. And why is that, right? We have to understand more why that's happening. So I actually want to take a look at their 10Q report. I haven't done that, so give me a quick second to take a look at that. So I'm taking a look now at their most recent statement of cash flows, and we can see this quarter was actually one of the first quarters that they were actually able to do a positive operating a positive cash by operating activities, and that to me is actually very bullish. They do mention that because of the form of type of business that they do, which does with financing, they have to do some form of adjustment, more of an adjustment type cash flow to actually show the true value of how their cash flow from operations is doing. And same time last year, for example, they have it here, cash flow from operations, even though in the international system it showed as negative, they did adjust it to what they believe their actual business is doing. It was actually positive. But away from that, we have these international laws for a reason. So to me, that's, if I was investing in it right now, that would be one of my major points to really keep an eye out. But to see that this first quarter was actually a proven positive positive cash flow from operating activities, even using the international financial accounting rules, and they still showed positive, I think that's actually a good step forward. But again, just something I wanted to mention to you guys. So now that's pretty much it for this episode. I hope you guys enjoyed it. We did look at a lot of information, and now I got to think about what I want to do with this business, and am I gonna invest in them? Right now, my thoughts are, if you guys have looked at my previous portfolio, my previous episode where I talked about my growth portfolio, I pretty much, even though I have over 47 companies, I pretty much just invest in 7 sectors. E-payment and e-commerce are one part of that sector, which Stone would provide in. Now I have to actually go back and see if that sector needs to be added on. I think for that sector, I only want that sector to be about 10% of my portfolio. So right now I have to go back and look at my numbers and see, hey, am I meeting my expected numbers right now in that form of sector? If I need to increase my position, Stone is one I would actually enter. And again, like I said, I have about 47 to 48 businesses. So for me, that would probably be only like a 1 to 2% jump in a position. So it's not something that I am going to invest 7 to 8% of my total portfolio at the moment. And this is just how I'm gonna run it, right? I do like I like a lot the market they're in. I understand the risk, right? I do believe, especially Brazil is in early stages, but if I wanted to get more international position in my portfolio, Stone would actually be one. Like I said, I'm big in their e-commerce, I'm big in the e-payments. They do seem to be investing in businesses that will help them grow their circle that they were talking about, their wheel that they're talking about. So it does seem like a very, to me, it seems like a great business, one that I am willing to invest in if I need to add position into my e-payments and my e-commerce sales. So let me know, what are your thoughts? What are you guys going to do? Are you guys happy you guys saw this episode? Did you guys learn anything? Again, there are a lot of great things with this business, but there also are there's also some risk that comes with it. So let me know what your thoughts are on Stone. Make sure to let me know in the comments. Take care, guys. Have a good night, and see you next time.